Hello traders and welcome to another video review. Today is Tuesday, April 19th, 2022. We are going to start as usual with the Forex calendar review. Not too much is today in the calendar. As you can see here, we got only monetary policy meeting minutes released overnight, and then basically the London session doesn't exist, but we got some data scheduled for release from during the New York session from the Canada housing starts and Virgin Securities purchases. Then we got, of course, building permits and housing starts from the US. So those are some data from the housing market in the US. We got the FOMC member Charles Evans. He will give a speech 6:05, and at the end of the day, 6:30, we got Swiss National Bank Chairman Thomas Jordan will give a speech. So I guess some speeches are here, some data are here. However, the volatility during the London session might be very limited. Nevertheless, let's take a look at the Australian dollar, let's take a look at the Swiss franc, and then of course at the Canadian dollar, because those currencies might be traded today, and some of these events might trigger some kind of a move. Let's start with the Australian dollar. Daily time frame chart of the Australian dollar is the one that we are following since the lows of the end of the January 2022. We have noticed this pattern here, big pin bar with a high around the level of 7,662. Then we got confirmation. We have red candle down, we went lower, and then there was a very shallow bounce about 7,500, and then we have the continuation of the down move. We broke below the technical support at 7,366. The next target is 7,319. However, please notice two facts. One thing is, we are now trading below the long-term trend line. If you don't remember this trend line, please keep an eye on it, because it's a long-term trend line, very nice trend line here, 2021, the end of the February 2021, so it's over 1 year old. We have a false breakout, go back to the trend line, and right now we are testing it, right? We are testing the trend line, and the second thing is we are testing the lower channel boundary. If you are not there, not quite there yet, however, if you are not quite there yet, we will be there soon. So the level that the lower channel line is around 7,340 pips, so it's like a 20 pips above the technical support at 7,319. However, this is another key level, so any breakout below 7,319 will open the road way lower, first towards 7,160 and 68, and then towards 7,141. This is the next technical support. For now, it doesn't look like the market is reversing from this lower channel line. However, it is still possible. Nevertheless, for the market to become more bullish, we need to break above this high, and this high is 7,495. okay, so as long as we trade inside of the channel, there's still a chance that, of course, we can go higher. However, any breakout below 7,319 will open the road lower, and because as you can see here, the momentum is still negative and the bears are in control of the Australian dollar, we are right now bearish, short-term bearish, skewed then bullish. Okay, but keep an eye on 7,319. Keep an eye on this local technical resistance, 7,396. There will be some sort of the battle here between these two levels. We will see who is going to win. It looks like the bears are winning. However, we might have some V-shaped reversal and a higher bounce. For now, we are continuing to the downside on the Australian dollar. Let's take a look at the US dollar to the Canadian dollar because of the Canadian data. For now, as you can see on a daily time frame chart, everything is going according to our scenario. The reversal from the 50% of the Fibonacci retracement of the last wave down was still the key level on the chart. The next one is of course 61%, located at 1.2708. However, there is no follow through after this massive candle here. This candle is of course a reversal candle, right? So we got the indication for the wave B top around the level of 1.2675. However, we need a stronger down move, impulsive down move below the lows of the 14th of the March, 1.2520, below this technical support 1.2450, and below the lows of the wave A 1.2403, in order to fully develop the wave C. If the wave B has not been terminated at this level here, it means the wave B will be a little bit more complex in price and time than the usual ABC corrective pattern. So please keep an eye on the US dollar to the Canadian dollar. So far, so good. The 50% Fibonacci retracement and 1.2635 are getting rejected. So right now the outlook is still bearish in the short term. And last but not least, let's take a look at the US dollar to the Swiss franc because of the comments from the Thomas Jordan. What is going on here? Well. Daily time frame chart of the US dollar to the Swiss franc. Let me just zoom out first. We've been moving inside of this channel for quite some time right now, and I will just extend this line here. So we are testing the upper channel line, and as you can see, let me just extend the lower line. There you go. And as you can see, we broke recently above the high from the this is the middle of the March 2022. 9,459 was violated. The local new high is 9,462, just a few pips, however is still valid breakout, and we are heading towards the key technical resistance, 9,473. We are just a few pips away. Please notice the fact that the recent rally to the upside, right, towards the technical resistance is in 3 waves. So it's still kind of a corrective. We have the wave A, wave B, wave C. Let me just take a look at this a little bit right now, because it looks like we might have some sort of the I took the retracement. Retracement is not important here. We need a Fibonacci projection, of course. There you go, because it might be 100 projection, right? So let's just take a look. Where is the 100? Show me the options. There you go. 100 is around here. There you go, just as I thought. The wave A is equal to the wave C. We got 100. The 100 is let me just put it here. There you go. So what do we have right now on the US dollar to the Swiss franc is the ABC pattern with the equal legs A to the wave C, right? So we got A, we got B, and we got C. So the wave C is 100% length of the wave A. Very nice pattern. And right now, if we consider the fact that we are heading towards the extremely overbought market conditions, okay, despite the fact that the market momentum is strong and positive, we are heading towards the extremely overbought market conditions. We are just at the technical resistance. We are heading towards the 9,472 technical resistance, key technical resistance. 100% is done in Fibonacci relationships, and the upper channel line was hit. This is very strong level 2 bears, because they will, they might, I don't know if they will, but they might enter here and push the prices lower. Of course, the next support is 9,377. So please keep an eye on the current market developing on the US dollar to the Swiss franc. Very important level, very interesting level. There might be some kind of a bearish pressure here. And last but not least, let's take a look at the Bitcoin. What is Bitcoin doing? We have very interesting pattern here. After the market made a correction, this correction was 20%, so it's a little bit less than the biggest correction during the whole up move. We are still below the trend line. We are below the technical supports, the old technical supports. The low was made at 38,574. However, this shape of the pin bar is showing us, let me just extend this rectangle. This pin bar is kind of a hammer pin bar, which means obviously 1, 2, 3, 4, 5, and now it's time for the corrective rally. The target is 42,616 on Bitcoin before the downtrend will probably resume. Okay, momentum is negative, momentum is weak, so it confirms the short-term outlook, short-term bearish outlook for the Bitcoin. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.